Hello, everyone. How's everyone today? Thank you for joining us webinar. All right, Ethan here from Investing Note. Okay, let's see the attendees streaming in. All right, let's just give us everybody 1 minute to settle down and join us and dial in to this webinar. Okay. All right. Just share my screen. Okay. Okay, just 1 minute, guys. Thank you all for joining us. Right, so we do have two tournament champions here, right? First place, the BearProwl, also known as by his real name, Aaron Sim, and also second place, Alex Yo. All right, so unfortunately, third position, Tommy is he's unable to join us today because he's having COVID. So we wish him a speedy recovery. Okay, right, more people coming in. Okay, time check. Okay, 1 minute. All right. Thank you everybody for joining us. Ethan here for Investing Note. As you know, right, our UBS leverage trading tournament ended about a week ago, and this purpose of this webinar is to highlight and get some trading insights from the people who have won the tournament. All right, so they've beat more than 1,000 other participants to actually secure the spots. Later, I'll go through some of the key statistics in this tournament. All right, so do listen closely to what our champions have to say. Of course, Mr. BearProwl, Aaron, actually is a veteran community member in Investing Note for a long time, and he has won previously two other competitions. One of them was the SGX Bull Charge Stock Challenge in 2018, right? He basically beat other fund managers and influencers because this stock challenge was a thing that organized by SGX and we supported it, right? So he was the first, and also the previous tournament in 2020. All right, so without further ado, let me move on. Right, of course, disclaimer first, what we share in this webinar is for the purpose of your learning, and of course, most of the trades that they have done were during the competition. Okay. All right. So this is how the whole entire webinar will go. Right. So I'll be sharing some key tournament statistics. Right. That will be an eye opener. Right. And also I'll pass my time over to Alvin, who's our valued co-partner. Right. From UBS. Okay, so he'll be sharing with us some of the latest updates on DLCs. Then we'll move on to the announcements of different prize winners, including the registration prizes and also make a trade prizes. Okay, then last but not least will be the sharings and insights by both Aaron and Alex. Okay, we move on. Right, so let me just run through quickly what are the key tournament statistics for this year. All right. So of course, the tournament ran from 31st October to 18 November. Everybody was given a virtual capital of 100,000, and we had a total of 1,168 participants. Of course, this is just focused on Singapore participants only for this year. All right, so special shout out to our value partners. So these were the partners that helped us with the promotion, right? A shout out to you guys. Thanks for that. And also the supporting brokers, Phillip Capital and also Tiger Brokers for having special promos for trading DLCs, which I'll go through later as well. All right, shout out to all of you guys. Thanks for supporting us. And of course, our main sponsor is actually SGX Securities. Okay, right. So let's go through who the top 20 were. Of course, today we have the BearProwl and also Alex with us. Right, but if you see some of the top 20, this is the leaderboard, you might be able to see some familiar faces. Shout out to number 7, in position, Mr. Ong Bee Heng. I think for those people who have been with us in our community, you probably know him. Okay. Shout out to Mr. Stock Charm, number 10 as well. So Stock Charm is one of our veteran community members who has been with us, since a very long time. And Stock Charm was one of the finalists for one of the year's previous tournament as well, if I'm not wrong. Right. Shout out to number 12, Darrell Koo, right, who was one of the finalists for one of the previous year's tournament as well. Right. Then we have number 17, Contra Boy, and also Sean Ong. Right. So you know what's interesting? All of them, this top 20 guys and ladies, right, do have close to 100%, at least a 90% total portfolio return, right, throughout 3 weeks. That's very impressive. Right. So I'm pretty happy that we do have a lot of good traders here in our community. All right. So if you want to see what they traded, just go visit the tournament link and just click to the profile. Okay, I'll move on first. Okay, so right. So this time round, like I said, we are doing the tournament different because we only have one round. All right. So one round, 3 weeks, 100,000 capital. Meanwhile, all the trades and the portfolio are are transparent for all the public people to view. Okay, so this year, right, how we made it different was that the maximum allocation of cash per DLC for each underlying stock and index is actually cannot be more than 40% of the total portfolio. All right, so this stops people from going all in on a certain DLC. Okay, so this prevents people from being lucky, right? Okay, so the next thing to note is that the top most traded DLCs for this tournament was HSI long, HSI short, Meituan short, Nasdaq long, and Meituan long. All right, okay, so these were the statistics, right? So I think most of the people, this on the left is and on the right, what you see down here are the top 10 most traded DLCs. Okay, these are ranked by total transaction value. Of course, on the left, we have HSI 7x long, right, to be the most transacted one, followed by the HSI short, followed by Meituan, followed by Nasdaq, followed by Meituan again, then Alibaba, Nasdaq, Tencent, Hang Seng Tech, and Tencent. All right, so these were most traded DLCs during the competition by our participants. And if you can see on the right most column, right, so how many traders were actually profitable on those trades? For the first one on HSI long, 84% of these buyers were actually profitable. Okay, but of course, those people who were short was 18%. Okay, then the numbers you can see very clearly. But all in all, I think the general numbers are that, the profitable traders know what they are doing. Okay, because there are a lot of DLCs with profitable buyers count more than 50%. Okay, all right. Move on. So I pass my time over to Alvin, who is from UBS, sorry, not TBS. Apologize, my slip of the tongue, right? To actually give us some updates on DLCs. Alvin, over to you.
Okay, thank you, Ethan. Hi everyone. Good evening. I'm Alvin from UBS, and tonight, I think, well, first of all, thank you very much for joining this session, and also thank you very much for joining the tournament as well. I hope you have won some prizes and also have learned something from this game, and especially for those of you who prior to this game have not traded DLCs or have not even heard of DLCs before. I hope you learned something from this tournament. And so I think tonight I'll just spend maybe around 5 minutes to talk about some of the latest updates of us UBS on DLCs. Well, actually, first of all, I think for some of you may know, right, that actually this year is our first year entering the market issuing DLCs. So I'm sure for those of you who have joined like the sort of annual DLC trading tournament in the previous years. The sponsor was another issuer in the previous years, and so this year we become one of the actually not just sponsor but co-organizer of the tournament, and actually we only started issuing DLCs in this February. So I think we have only so it's only 9 months by now. But we have already issued more than 200 DLCs already on more than 25 Hong Kong underlines, as well as a couple of US underlines as well. So we are proactively expanding the product shelf, and we also hope you'll give us some feedback after this tournament, and also especially after you have traded our DLCs for real. We welcome any feedback. And I think let me just quickly go to our website to give you a bit of an update. So this is the web page. So I think for those of you especially who have not traded DLCs for real before, I think you can find a lot of useful information from the website. The website link is dlc.ubs.com. So it's quite easy to remember. And first update is that I noticed that a lot of the top traded DLCs that Ethan just shared, I think most of them I would say are quite like good DLCs. And reason I want to point this out is because a lot of times when you want to trade some DLCs, you will find that, for example, for certain stock, for certain like leverage and also direction, you will see like a couple of DLCs. All of them are linked to the same stock, and then all of them are 5 times. All of them are maybe long DLCs, for example, right? But then I think one of the most common misconceptions is that the people, when they want to pick a DLC, most of the time they pick the one that is the cheaper price. This is something that I would like to point out, because it's actually the other way around. It's actually the higher price. It's not more expensive, but I'm just the price level is higher. That DLC is usually the better choice. It's because that DLC is usually more sensitive than the one that is at a lower price. It's because of the fixed price spread, for like regardless of the DLC price, basically. So the lower the DLC price, the bigger the minimum spread will be. So that's why usually you want to pick the one at a higher price, right? So you can actually find this info if you go to products, and then if you go to do a search, and then first of all, this is our DLCs, and then if you go to let me go to here. So for example, I think I think Meituan should be a pretty good example, because Meituan has been very choppy, and then so we have we needed to issue more DLCs to replenish the shelf. And so if you go to the long, for example, so just Meituan 5 times long, you have got 3 DLCs, right? And then I think when you encounter situation like this, you want to go to the last column, sensitivity, and then you sort by sensitivity, and then you pick the one that has the lowest sensitivity level. So because, for example, if you look at this one, right, it's basically worthless because of the previous Meituan. There were periods where Meituan just kept dropping and dropping, and then so this long DLC has decreased to basically 0 value, and then that's why the sensitivity is super high. In theory, it requires $530 of Meituan just to move this DLC by 1 tick. So it to be honest, it doesn't really make sense. This product is still live. It's simply because of the fact that we cannot delist the product, due to SGX regulations. And but I think we didn't even include this DLC into the shelf of this tournament. Is because we actually, I think we set a rule to exclude certain DLCs that is below certain price. And so in this case, you would want to pick the one that is that has the lowest sensitivity level, and and it's the one that is, on top. Okay, so this is the, one of the things I would like to point out. And the other thing I would like to also talk about is that I saw the top 5 traded DLCs this year is HSI, and then Meituan, and also last one is the Nasdaq, which, to be honest, I'm a bit surprised. It's because if we look at the actual trading value, we to be honest, we don't really see a lot of US DLCs, coming on like a top 5 or top 10. So I was really surprised. And so for us, right, issuing US DLC is still quite recent thing. And actually, we were the first issuer to issue the 7 times DLCs on Nasdaq. So and if you wonder how how DLCs on US indices work, for example, you may be wondering, because there's no US market, right, during SGX hours, and how the DLCs would move, and how obviously they track the futures, but how they actually track the futures, and whether or not other features will still be in place for US indices DLCs, for example, like airbag mechanism, etc. This kind of thing, I think you can go to this US index DLCs page that we have just recently developed. So at the moment, we have issued DLCs on both Nasdaq 100 index and also the Dow Jones Industrial Average. So these are the DLCs that we have on the US indices. So if you have time, go to the website, pay a visit to this page to find out more about the US DLCs. So I think, okay, let me just stop sharing. First, go back to, okay. Yeah, so I think overall, I really hope you learned something about the DLCs, and especially for those of you who haven't traded DLCs before. For those of you who have traded, who are familiar with DLCs, I hope after this game, you would agree that our pricing is not too bad. And then in the future, whenever you trade DLCs, hope you also pay attention to the issuer of DLCs, because nowadays there are more than one issuer in the market. And I think issuer as well as the market maker can really make a difference in your investment return. So thank you very much for joining the tournament, and I'll pass the stage back to Ethan.
All right, thanks, Alvin, for sharing the updates on the DLCs. All right, it's pretty exciting to actually have US DLCs, right, that gives more people more options when they want to trade. All right, so let me just share my screen, and right now the next segment is I'm going to announce, right, the winners, right, all the winners for this tournament, right. So okay, let me just recap the grand prizes first. Okay, of course, first prize $4,000 cash, second prize $2,000, third prize $1,000. Right. So the other prizes, we are talking about daily top trades, $60 Capitaland vouchers for 15 winners, because there was 15 days of trading. Right. So you guys actually probably know who you are already. Right. Then the next one is actually registration prizes. Right. So we'll be announcing a winner of the one Apple TV 4K, one Samsung curved monitor, and also a Nintendo Switch. So 3 winners for that. Right, in total. Right. Then the last but not least, will be the make a trade prizes. So we have 30 winners winning 30 Capitaland vouchers for trading at least 3 times during the tournament. So we are clear about the prizes, right? Okay, let's move on. So let's start with the top 15 daily winners. So these people are the winners where they actually close a DLC trade with the single biggest realized profit, right, for that particular trading day among everybody else. So each of them will be winning $60 Capitaland vouchers. All right, so these are the users. Our Life is Fun, Ken Waiting, Chong88, Alex Yo, yeah, number 2, Tommy, number 3, right, Ong Ken Ho, Zhu Wei Liang. All right, so these are the returns that they got on a single DLC trade. So, Alex here on this leaderboard, 170% on a single DLC, which is a Ping An Long. Stellar results. Okay. Right. Then we have KC Teo, Kenny Chia, I think one of the veterans as well. from the previous tournament. Of course, Mr. BearProwl, right? And Glenn, yeah, Glenn Tong, I think he is a familiar name. I think he probably was one of the finalists of our previous tournament as well. So these are all the, big trades that these 15 guys and ladies have made, right? So we'll be giving them $60 voucher each, right? So wait for our email. I'll contact you separately. All right. So the next category, make a trade 30x lucky winners. So these participants were based on the participants who make at least 3 trades, right? So the more you trade, the higher the chances. Okay, so I think the total maximum amount of chances you can get is 7 chances. So these people, regardless they got positive or negative returns, they will get $30 Capitaland voucher. All right, so these are the winners. So people in the audience, if you see your username here, we will contact you on how to get your $30 Capitaland voucher, right? Of course, we see a familiar name, Li Guangshen, one of our veteran community members. Well, right, Jasmine 90, I think I see her somewhere. Yeah, Precision X as well. Yeah, so quite a few veteran names in our community that won. Congratulations to all you 30 people. Okay, we'll contact you separately. Congrats, Okay, we move on. Right, so these are the registration prize winners for the Apple TV, Curve Monitor, and also the Nintendo Switch. All right, first off, we have Gregory Lim 2. You won yourself an Apple TV 4K. So each of these prizes is worth about $400. So this Apple TV, we're giving out because it enhances your experience of entertainment at home. And I heard that this Apple TV can actually play some games. Okay, so we contact you, Gregory Lim 2. Okay, congratulations for participating. Right. So the next one, Nintendo Switch winner, Enfield 888. Okay, so you'll be going home with Nintendo Switch worth $400, right? And we'll be contacting you as well. Okay, congratulations. Last but not least, we have the Samsung 27-inch curved monitor winner, A Syllable. Okay, we'll be contacting you. Thanks for trading in our competition, our tournament. We hope that you had some key takeaways. Okay, so at the same time, I think we ran a year-end giveaway for this 2-day 1-night staycation, right? Ending 2022 off with a bang. All right. I say it cheekily. All right. So 2-day 1-night staycation at Sofitel Sentosa. So the winner goes to LT Pin 78. Okay, you're the lucky winner. All right. So we'll be contacting all you guys, right, for your prizes separately, right, throughout the week. So thank you all for joining us and participating in this tournament. Okay, so we move on to the next section, which most of y'all will be probably, joining us for this webinar 4, right? Trading Insights by Tournament Champions. So we're going to start off with our 3rd place, right? So our 3rd place is actually congratulations all to Tommy Talim, right? So this is how he looks in person. He's supposed to join us, but unfortunately he's having COVID right now. I wish you a speedy recovery, Tommy. Right, so he has a total of 139+% total returns on his portfolio. Okay, so he beat the rest of the guys except the 2 top winners, right? So I'm going to share some trading insights from him on how he actually did it. Okay, so he'll be winning $1,000 cash, right? So on behalf of Tommy, right? So I asked Tommy what he worked as. Right, he's actually working as a product manager in one of these global shipping companies. Right, so he actually told me that he started investing 4 to 5 years ago with the guidance of Brian Harlin. Right, starting from Singapore, slowly moving to Hong Kong and into US right now. So for the audience, you probably know who Brian Harlin is. He's also better known as 3FS, Forever Financial Freedom. Right, who is a very prominent financial blogger and our veteran community member as well. So he's been learning from Brian. All right, so portfolio-wise, he's actually leaning towards Chinese tech, which obviously took a hit in the past several months. But he's also trying to diversify his portfolio in the US market. All right. So for him, DLC is actually kind of like a double-edged sword, right? Because to him, it can amplify his gains if you use it correctly. But also it could amplify losses if you use it wrongly. So for him, his trading strategy is to, buy the long DLC and hold, at least for the sake of the competition. So during the time the tournament started, he believes that, most of the Chinese tech has been beaten out pretty badly and way oversold. This is what he believes, guys, right? Okay, so during that time, he believed that the rebound would happen sooner or later. So I think so some of his trades, right, were on the long side, right? So he believes that he should ride that trading momentum, the upside. Of course, then again, for risk management, he chose a sort of safer DLC, right, such as the Hang Seng Tech ETF, HSI, and Alibaba, right? So he believes this safer DLCs, of course, quote unquote, right, has less risk than the rest, right? But if you look at the final point, that he actually means that these DLCs wouldn't have bigger swings as compared to DLCs with underlying such as Meituan or Kuaishou, because these other stocks probably move, the underlying, right, actually moves pretty crazily, right? So I think this is what he meant by lesser risk. All right, so this is his ultimate trading insight that he shared. So, unfortunately, he couldn't be with us today, right? So if you have any questions, you can just leave it in the comments. Then we'll try our best to ask him if we have another round of webinars. All right, so without further ado, I move on to, our second position, right? Total percentage return, 198.93% total returns. Congratulations, Alex Yo. You win $2,000. Alex.
Okay.
Hi. Yeah, so I think Alex, previously we've met, we've corresponded before, we've even spoke, before in person, right? Alex is a very, very nice guy, and he has some, real trading skills up his sleeve. So I leave it to Alex to actually share with you how he actually traded. Alex?
Hi, thanks. Let me share my screen first.
Yes.
Everyone. Thanks
All right.
to UBS for making this happen. So what I'm here to do is just to share how I work. And to do that, I'll just show what I traded. So I guess that's the easiest way to see how I did it. What I like to share is maybe at the start, I like to show everyone the market movement in the last couple of the last period. You can see here that the HSI in the last month pretty much was an uptrend, then it came down a little bit, because it went up today. But if you look at the 6-month trend, right, the right-hand chart, you can see that when we started the DLC, right, that was pretty much near the bottom. Then by the time we ended the DLC quotation, the market went up 25%. So this is the framework. And then you can see that in the trades, I was able to capture 2 moves. So what I want to share here first, what I did was I followed the market until it hit the resistance. So on the left, you can see the date which I entered the trade, 31st October, the first day. I pretty much entered with PR around 10.7.
Sorry, I interrupt you a bit, Alex. I think you can, your side is a bit muffled.
Right, is it better now?
Can you try again?
Hello.
Yes.
Okay.
Yes.
Yes, okay, so on the left, you can see the trade which is entered into on day one. It's all long positions as well. You saw just now when I presented the slides. The long positions were clear because of the way the market moved. Right, then I was able to sell I closed my positions on the 15th of November. So that's why I got the big gain on Ping An, right? So why did I enter into these positions? I think I entered into tight positions because everyone knows that these are the more volatile positions. So I think that's easily understood. Why I entered into Ping An, because Ping An was hit very badly by the property situation in China. So I also had a confidence that Ping An would rebound significantly, which is why I entered into Ping An. And Ping An was the stock that helped me win the daily price as well. So I was able to catch the first market movement where I closed all my positions on the 15th. And secondly, I went into short positions. So same day, 15th November, I shorted the market. I think 15 was maybe the third or fourth last day of the competition already. So on the 17th, I closed all the short positions, which I think was a little bit early, but I was still able to make a sizable profit. So this allowed me to overtake the people who were just long. Because those who were just long buyers, they were hit a little bit when the market went down in the last 2 or 3 days. So that was when I kind of overtook everyone and got into second position. And then, of course, what I did, everyone knew that week was the earnings week for stocks like Alibaba, JD, Tencent. So here, what I did, you can see on the 17th July, I bought Alibaba. So these are some of the tactical plays, the trading plays that I did. But the main play I did was to long Alibaba and also to buy HS Tech. And then which I both sold on the 18th of November. So this allowed me to kind of secure my second position. So in short, 3 parts. First part was the long buyers. Second part was to capture the short when the index hit the resistance. And the third part was the tactical plays from the earning results, such as from Alibaba. If everyone remember, it went up by 5% at the bell, and then it slowly came down. So you can see that I closed my positions on the bell, which allowed me to maintain the lead. And then finally, tips on trading DLCs. I think most people already know DLCs are pretty much meant for short-term trades. Then you need to take note of the bid and ask spread when executing trades, and what Alvin pointed out earlier, the higher price DLCs are a better option to trade with due to the spread and liquidity. Then lastly, the advice I have is to be aware of the opening hours of the underlying stock index, meaning everyone knows that HSI is open from 9:30 to 4, but I think you can trade a DLC from 9 to 5. So you have to be careful of the off hours. So that's all I have. I want to hand over my time to Aaron, who is the overall winner.
Okay, Alex, you were a bit muffled at the end, but it's okay. I guess for the attendees, you can always replay the video. It's going to be up on YouTube as well. Right, thanks for sharing. So it's very interesting that you can actually take, your style, as what I can see, some can actually last quite long, and also, matter of 1 or 2 days. So there was some tactic there lah. And I think, trading before earnings is pretty, you probably need to do a lot of homework on Alibaba to be able to do that. And also be very be ready to cut loss or take profit at a certain level for that. So props off to you, Alex. You made it to the second, right? So thanks for sharing, right? So of course, the next one we're gonna have, what is this? All right, so of course, our next, the grand winner, right? First place, 205.16% total returns. Congratulations to Mr. BearProwl, aka, by his real name, I was going to address him by that, Mr. Aaron Sim. And shout out, one thing first, for those people who joined late, you got to know BearProwl, Mr. Aaron here, has actually won previous rounds of competition. In 2020, he won first position, right, for the training tournament, and also the SGX Bull Charge in 2018. So SGX Bull Charge, right, was a closed door private tournament held between fund managers and influencers, right? But he managed to clinch the spot. So props off to him. So Aaron, yeah, so we all, want to hear from you how you did it for the third time, right?
Thanks, Ethan, for the introduction. Allow me to look my slides, please. 1 second. Yeah, if everyone can see my slides, I'll start now.
Yes.
Thanks, Ethan. Yeah, thanks, Ethan, for the introduction, really, and good evening, everyone. Thanks, Alex. Good presentation, and of course, Alvin earlier. Good introduction on DLCs and the products and fees involved. So, just to start off, really, I'll run through a couple of topics today on Ethan's request on really DLC trading, how we have done the trading in the past few tournaments, and again, giving a quick overview on the 2023 and 2024 market outlook as well. So I'll start off with a quick introduction to the BearProwl. It's a financial blog established since 2018. Then when I think the origin of it really, it's trying to then the market was kind of on the high side, and there's some risk present in the market, whereby we start giving market analysis from a macro perspective to readers on our Facebook page and on our blog page and on the forums as well. So it's really macro analysis, really to spot longer term market trends where we will be able to know, or at least try to stay on the trend, or if it's a turning point when good money is to be made, we will be able to capitalize on that. So the next part that we have been working on in the past few years as well, it's really market positioning analysis on open interest on various markets, be it HSI, open interest that you can find on the Hong Kong Exchange website, or individual stocks, individual Hong Kong stock warrants, which can influence the price of the stock at various turning levels. So really to get high probability trades, we cater to both investors and traders. We're not offering anything at the moment, but we are looking to further expand the offering down in 2023. We're on Facebook and Investing Node, the BearProwl tag. So let's see, quick introduction. Then go on next. Today, I'll run through a quick, just 3 points really. Product knowledge on DLCs, some of the game theory involved when we run our tournament, our trading competition organized by Investing Node, how we actually trade the tournament in the past 3 weeks, looking at various high probability setups, some of the TA and psychological factors involved in how we take profits and position for the markets. And lastly, I'll head off with global market outlook for the next 2 years. Right, so UBS DLCs really, or DLCs in general, one of the main reasons that I think that it's pretty critical in terms of why we can actually position or at least have a stronger front in this tournament, in the previous tournaments, is really the product understanding of the product itself. So just a couple of pointers to point out the leverage factor. So high leverage, most of the DLCs are 5x, 7x. Across the indices or individual stocks. So a small amount of capital outlay gives you 5x exposure, 7x exposure in that sense. So you know that equates to really large moves. If the particular stock, for example, Alibaba is up 10%, your DLCs is up 50%. Compounding effect as well. So one thing to really note, and this is actually a very critical risk management factor, which really requires pretty much active management. The compounding effect of the DLCs. For instance, if a stock it's up 10% today, the DLC price is going to be up 50%, and the next day it sort of resets. If it's up another 5%, it's compounding on the closing price x 25, x 25%, 1.25. So it's really and vice versa, of course. Hearing the upside and the downside can be significant as well. So really, I think one thing to note for all retail traders involved, it's the compounding effect is actually really critical to take note, given the fact that if the stock is down, I know there's an airbag of 15%, but if it's down like 20%, it's going to move, just wipe off all the equity you have on a particular DLC. So it's not suitable for long-term trading. I highlighted that in red. But again, compounding effect allows us to really know which stock to hold. So for instance, Ethan, great job to Investing Node this time to having a 40%, 40K threshold on a particular DLC. So if you want to actually, so if the DLC is from 40K, if you earn like 40K out of it, so that's like 80K, you've got an 80K exposure on, for instance, Meituan or whatever. And if you are confident on that, then you shouldn't really take profit. You should really hold on because it's 80K exposure. You can't get 80K exposure again if you were to sell and go back to the market. So just a couple of game theory methods that we look at as well. It's very suitable for short-term traders. Low capital outlay. I would say the bid-ask spread is pretty tight as well for as compared to really pretty tight as well, given the leverage factor as compared to the actual equity. It's very suitable for short-term hedging, product hedging, portfolio hedging requirements as well. But again, I want to emphasize short-term. For instance, if there's an overnight risk, you have a long Alibaba stock, there's an overnight risk, they're going to announce the results at 8 p.m. local time. You can't sell your stock when it's out, unless, of course, you're long US equity. You can consider to actually, before 4 p.m. close, go long the short DLC, appropriate sort of measurement. If it's 5x, then you can just decide on how much you want to hedge. So it's a very good hedging tool, I would say, just in case you meet with a bad earnings result after market hours in Hong Kong. So yeah. Right, I'll run through quickly on the way that we have done the trading in the past 3 weeks. If you can see my mouse cursor now, I believe the tournament started on the 31st of October. It was a Monday, and the market just really get down. It was really this final bar here. We got long at the market open at around 9:30, 9:35, thinking that it could sort of form a double bottom. I think on the double bottom, given that in the past, in the previous Wednesday, it was sort of a low, and then we sort of get a rejection there. So on double bottom, and it was pretty good. We managed to really capture the wave up. So we hold on all the profits. There is a trend line down as well. Trend line down. So we were just really watching. Given that it has been down that much in attraction, the chance of it doing a great bounce, it's the chance of it is pretty substantial. We waited for it to really move up to the trend line across, whereby then it was ahead of the CPI data. It was ahead of the CPI data, and of course we got this really large breaking off the downtrend. Then I recall it was the COVID rumor on the 4th of November. We were long then. The market rallied into lunchtime. I recall we decided to take profits on that, just really to square out our weekend risk, because we know that there was a Saturday 3 p.m. Presentation or discussion by the Chinese health authorities. We decided enough is enough. The market has probably done a good move of the lows. We took the profits on the 5th of November. We were flat, and of course, the rumor was denied. And I recall on Monday morning, of course, the market starts to open way lower. So then we were really leading. November 17, October CPI. Then we were leading just by a small margin. I looked through the top 5 participants who were long. The markets, the participants have in generally flipped short. I think most of the guys were expecting a stronger CPI. Looking back at the August, September CPI, we often get a knee-jerk lower. The market was really priming, and you can see market participants really priming for another similar move. Our macro analysis then was really the year-on-year CPI print at 7.9 was probably a bit aggressive, given where the lower crude oil prices that we had compared to the past 4 to 5 months on gasoline prices. We decided to really remain long rather than follow the market to be short, and it turned out well. Of course, month-on-month CPI was 0.2 versus 0.4. The market, I think, S&P was up 4% on that news, and of course you get Hong Kong Valley following up that. So it was really macro analysis together with really we know that the US market is very short. Then, if anything, the risk reward tend to be tilted to the upside. We stayed long and took profits on Friday morning, which is 18th of November. And that move was deemed sort of still a bit early. We heard rumors on just before lunch on China further easing COVID measures again. Then we took profits and decided to stay out, thinking enough is enough. But of course, the rumors were confirmed at roughly around 1 p.m., hitting the headlines, and of course, HSI just rallied throughout the weekend and gave out on Monday. But otherwise, just really giving viewers today a brief outlook of how we really position on the markets, and it's really tactical trading. We believe tactical trading is pretty critical. Even if you are a long-term investor, markets turn really quickly these days. It's hard to tell how macro data positioning is going to be in the next 1 month, 3 months. So at least for now, I think it's good to be more probably trading from a tactical basis. Right, done with with how we have traded in the past during the tournament in the past month. I just give upon request from Ethan, I'm going to give a quick view of how we actually engage on a longer term view. I think basically the previous FOMC meetings, we're looking at probably around 4.75% Fed terminal rate going into 2023. Well, I have hinted in the past FOMC meeting that it's not the rate, the pace of the rate hikes, but really the how high is the terminal rate going to go. So he's really hinting that we might need in 2023 even higher Fed terminal rate. So, but even if we stay at 4.55 for next year, for H1 next year, again on a corporate front, I think it translates, adding on the bank spread, it translates to 7% all-in financing costs. The market is addicted to the financing costs in the past 5 years, around 3% on AAA rated debt. So there's a significant jump in financing costs, a demand drag on a global perspective as well. We expect earnings to really further move lower in US corporates in 2023, as long as the Fed rate remains high, which the Fed have committed to a good extent already. So that's for US, pretty bearish US going forward. In Asia, somewhere near the home, again, FX rates, the dollar have done a pretty good correction in the past 1 month. But still, again, funding cost is high in the US. We don't think the US dollar strength it's over yet. There is some talks of possible rate cuts coming in into, I think Fed Fund futures or US dollar futures are pricing in probably July, August, first rate cut. Again, I think it's hard to say. Probably got to wait for more feedback from Powell in the next 2 FOMC sessions. Crude oil, gasoline prices in the US have fallen significantly from the highs. It still remains a wild card, we think, indirectly affecting the Fed decision. The Fed is very wary not to really ease too much or give expectations of easing too early, learning from the lessons in the 70s, whereby they put the brakes too early and we got second layer of inflation within the next 2 years, which go all the way up to like 20%. So I think the Fed is going to be pretty much holding a high Fed terminal rate throughout 23. And then again, it's a drag to the markets. I think the market have not yet have initially really tried to reflect sort of that, but I think we are the market could be front running it a bit in terms of the cuts, which might not really materialize into 24. Just sort of a technical perspective as well. A lot of guys are asking us, how's the market coming up? What do you guys think on 23, 24? I think it's a demand drag, as I mentioned in my earlier slide, on just financing costs alone, which is a standing issue as compared to what we have in the past 10 years. So if you recall, in the past 10 years, often we get the large swings. The VIX on the S&P 500, we often get the large 20% corrections, and then we get a bull market again, Fed QE again, and QE forever, and get a great bull market. This time it's significantly different. We've got higher energy prices, real supply side driven inflationary pressures that the Fed couldn't really print oil to ease the demand. So if you realize in the past, so I got my first chart on the top left, which is the current S&P 500 chart. You can see since Q4 in 2021, we have been moving sort of a slow drag down, rebound, slow drag down, rebound. It's a very slow move lower, very different from what we've seen in the past 7 years, whereby we get a 20% crash and then we get a V-shaped recovery. So just our view here really to sort of warn investors looking to enter in the market. It could really be a slow drag down. Dollar cost averaging might work, but maybe you want to really wait a bit longer. We're looking, because every bounce is being sold, you know for a fact that 2023, 2024 is going to be stress in financial markets condition. Real earnings growth are going to be lower. Financing costs could be higher. Debt issues on corporates could be an issue in terms of debt rollover as well. So we expect a slow move down on the S&P 500 and global markets. Something really similar to what we have in maybe the right side bottom chart. This is 2020 to 2022. It's a very similar pattern whereby the price just stays under the 200-day moving average. So all these are all daily charts. Stays under the 200-day moving average, and we get these kind of good bear market rallies and then down lower bear market rallies, and these can really last on for years, for 2 years, 2 to 3 years at least. So this chart on the lower left, it's really another example that we can show all the way down to 100 years ago. Price action tend to repeat itself. You get a large crash, and of course, it just stays under the 200-day moving average. Bounce on every rally, and the market just falls 90% on index points. in year 2000, we were down 40% on 50% on index points alone. Current year to date, we were down around 20% on S&P, not so much on the Dow, but still it's really showing that kind of similar pattern. Last week we were near the 200-day moving average, but again, it sort of get rejected. Yeah. So one of the way that we look at when to really time it from a price action perspective would really be waiting for the 50-day moving average, the purple line, 50-day moving average to cross above the 200. So no hurry right now if we are looking to invest, allow the market to really run its course. You know for a fact that rates are going to really remain high. Even if the Fed cut rates, doesn't mean that market is going to rally. We got a Fed cutting rates from 2000 all the way to 2002, and yeah, it's still bear market downtrend because by the time the market where the Fed start to cut the rates, it's bad data, it's bad earnings, it's credit risk in the markets, and yeah, just probably mean lower. So yes, I come to the end of my slides and my sharing. Happy to take any questions if you guys may have. Yeah, thank you.
Thanks, Aaron, for sharing. Very good insights there. It looks like we are, just getting started with the downtrend, or at least, for 2023 and 2024, right? Attendees, if you have any questions, please, for either Alex or Aaron, put into the chat, right? Put in the Q&A. Any questions, guys? No questions? No questions? Okay, Mr. Maslan Yusof, I think it's for Aaron. Can you explain what the 4 charts? Please BP last chart. I think maybe the axis, you can actually share the charts again. I think the axis would mean different time frames. Yeah. Aaron, can you share those charts again?
Let me get the charts out again. 1 second.
Yeah. Yeah.
It's basically this chart. Let me enlarge it. 1 second. Can you guys see the?
No, it's not showing.
1 second. Okay.
Yes.
Yeah. Could be a bit small on your iPad screen, but these are daily charts on the S&P 500 or major equity US equity indices, US indices. The bottom, of course, is the time frame. It's a daily chart. One dot is basically 1 day, and I'm pulling it out to probably 5 years time frame to really show you how a bear market can really evolve throughout a span of at least 26 to 36 months. So this chart, upper left, right chart is the current market chart, current S&P 500, which we are here probably on last Friday's close. The chart on the bottom is the 1929 chart to 1933. Significant down move, 90% on index points of the Dow Jones Industrial, the S&P don't really exist then. Again, the emphasis that I have is really that prices are just under the 200-day moving average. So no need to be trying to pick the bottom because we don't know where the bottom is. Can really take it easy until the 50-day moving average crosses over the 200-day moving average, and it applies on all charts actually, on all the charts that I'm showing on all the major 40 to 90% index points bear trend. Yeah, so that's the point we are trying to make.
Okay, thanks for answering the question, Aaron. So I think another question for you guys, I think both of you, right? Just wondering, right, how do you all learn to trade and invest? Any advice for someone who's starting his trading investment journey? Alex or Aaron, you want to share?
Yeah,
Yeah.
I'll go first. I started when I was young because I was interested. So I started reading and then look for a fundamental analysis and kind of see.
Sorry, Alex, we can't really hear you.
Hi.
Yeah.
Can you hear me better?
Yeah.
So I was
Yes,
saying,
now. Yeah.
It's always it's a long lifetime journey basically. So I start from reading the news, learning about fundamental analysis, then over time you start to focus on technical as well, and then once you get a good feel of the market, then trading and investing starts to become second nature. But like I said, it's a lifetime journey.
Aaron? Yeah.
Similarly to Alex, I've known Alex for probably 15 to 17 years right now. I think we started our markets journey together then, looking at US stocks and Singapore equities as well. It's really I think the basics, if you're really keen in financial markets, the basics would really be just looking at general previous approach. It could be macro analysis, looking at data releases, which comes in on a daily basis. You can be doing, as Alex mentioned, fundamental analysis on balance sheet of various companies as well. Technical perspective, it's really important as well if you're looking at intraday trading, swing trading, or really trading in general across broad asset classes. You need to really understand technical analysis, price action as well, and maybe in a certain way, as I mentioned earlier, positioning, given that a lot of the markets these days it's a very derivative driven market. A lot of options involved in a lot of the equity stocks or futures contracts as well, which can really drive markets without any fundamental. It's really flow moving into the markets to be a delta hedge across a DLC provider, for instance, just like UBS in this sense. So yes, so technical price action. How we have gone through is really to really put in the work. If this is really what you want, you really put in the work into it on a daily basis and through the years. You need at least 5 to 10 years of experience. Probably you have to find yourself a good mentor as well to really speed up the process for you. But again, passion. This is not for quick cash. If you're in for quick cash, my advice to you, it's probably best not to start. But again, a lot of focus into this as well.
All right, thanks Aaron and Alex for sharing. I think very valuable. Very valuable. But you've always heard people telling us that, oh, you know what, stay out of the market if you are interested in making quick gains, because eventually, if you're not skillful enough, you will sort of lose money more often than not lah. I think a lot of the audiences would actually, be, second testament to that, right? So one last question, right, by Mr. Kim Hong Chiok, right? Is Aaron suggesting stagflation coming through 2023 and 2024? Right, Aaron? You're on mute, yeah.
Thanks for the question. Regarding stagflation, really, again, maybe just a primer, stagflation being higher inflationary environment, sort of a higher unemployment rate as well, a demand drag basis, really higher prices but slow demand. So I think the Russian war have created conditions for higher commodity prices, although we got a pretty good correction down lower. But if prices can stay high, meaning that if we get a second round effect, meaning crude oil prices rising above 100, 120 into 2023, which doesn't allow the Fed to cut rates, then yes, I would say that it's pretty likely that we're going to go into stagflation, because going into H1 and H2 next year, most likely we're going to see worsening data across global corporates. Then I think we're probably going to get the unemployment rate rising, but the Fed at the same time unable to really cut rates or have to force through more rate hikes, really because of supply side demand. So as my slides mentioned earlier, the wild card really it's energy prices into 23, which is really critical. We got a high on WTI at 130. Today we are 74. That's like 40% down, but still that's what the Fed is watching. So again, boiling down to near-term politics, it's hard to say. As if energy prices can remain high or do a rebound into the second half of next year, yes, I think good chance we stagflation.
All right, thank you, Aaron, for answering that question. I think we've come to close to the end of the webinar. Thanks, Aaron, for sharing. So, one last thing before we leave, right? So, of course, there are actually 2 ongoing trading promos for DLCs, right? So we've partnered with Phillip Capital and also Tiger Brokers. So all you can do is just scan the QR codes here to actually learn more about those different promos, right? So I think Phillip Capital is giving out $88 cash credit and also $1,500 worth of bike vouchers for lucky draw, and as well as a Tiger as well. Yeah, I'm not sure exactly what's the details of the lucky draw. Scan to find out. All right. So Alvin, do you have any last words for our audience here?
Nothing further for me. Thank you.
All right, thank you everyone. So we come to the end of this webinar. I hope you really learned something, right? So if you want to catch the replay, it'll be out on YouTube. All right, thank you everyone. Thank you, Aaron. Thank you, Alvin. Have a great time. Thank you.
Thank you.
Bye-bye.
See you. Bye-bye.